Hello, all. Good evening. So, welcome to today's expiry analysis. So, it was a very trending expiry. So, let us get started. First, let us start with the end of the day data. So, yesterday, since it was a event due to Fed's interest rate decision, the FIIs not done much of the activity in the index options. So, since today is a weekly options expiry, it is the options data which will have a lot of weightage. So when you look at FIS data, there's nothing much in this data actually. So FIS data can be ignored, you can say. And we can also come to a broad conclusion that FIS have gone into the expiry with a neutral bias, right? But it is the prop desk actually who gave a bit of bearish bias in terms of their call shorting activity. So they've shorted a lot of calls. It's almost, you can see here that it's more than 5 times whatever put shorting they had done, right? So this gave a bit of bearish bias to me, especially um, because prop desk generally are professional traders and they give a set of direction sometimes. So we can consider in that sense that prop desk gave a bit of clue of today's move, and obviously the clients, you can see that they have done exactly the opposite of buying the calls. So the clients had bought a lot of calls and against the puts, so they were clearly bullish on the options. So I mean the EOD data from the FI perspective was neutral, but the prop desk gave a bit of bearish bias. And when we look at the stance of Fed, they kept the rates unchanged. So this was actually what the market was anticipating. So this was in line with the market's expectation, especially the this this was in line actually with the market's expectation, but it gave signals of two more potential hikes. So I mean this was a bit of a diplomatic stance from the Fed, where it gave that yes, it may hike two more times to keep the inflation under control, but they also acknowledged that they've made some progress in taming inflation by keeping the rates at very high level. So basically, the rates are pretty much restrictive in nature at the moment. So that's why we are seeing some bit of data across the world uh, where the demand is tapering a bit, and also some recessionary data which are coming out. That is natural when the rates are kept at very high level for a very long time. Anyway, but this is what was market was expecting. But this was something which gave a bit of hawkish tone to the overall, uh, uh, Fed's announcement. So again, this is what I mentioned in morning EOD commentary also, that we might have a negative to neutral expiry. So coming to today's data, first let us start with the price. So I mean the chart, you can see the charts how. So first let me start with by removing these levels and also explain today's context. So these were the levels which I mean levels or you can say the zones which I had readily drawn based on the previous price action pattern. So what happened was, I mean, this is the resistance zone, and then the potential support zone of yesterday's, where the market took off after a bit of this was small support and this was the small support, right? So this was these were the zones which were available prior to the expiry to trade, right? So when the market started today, you can see that the market just took support from the support zone, right? So it is very natural for the price to bounce from the um, support zone. So and the price headed higher. So once the high of this is taken out, the price went higher. In fact, Nifty broke yesterday's high also, and it started to go upwards. So as it went higher, why I mentioned this as a bull trap in the um, thumbnail is because Bank Nifty was not supporting similar up move, and since we are also using order flow to confirm our bias, so we come to this conclusion that when we look at the order flow data, here we can see a good amount of selling, which is coming at the higher levels. Just a minute. Yeah, so when you look at the topmost, I mean, this was the first support zone where you can see a lot of buying coming in. These are limit buyers. So these limit buyers gave a conclusion, and in fact, you didn't need these limit buyers to tell that the market would go up because the price was already in the support zone. But you definitely needed this on the upside to tell that it's not going up, because at the higher levels you can see here that there is 43k, 39k, 51k, so roughly more than you can see 780 plus some 60 small, more than 140k orders being punched on the ask at the top, right? So this definitely cannot be someone who is aggressively buying at the top. So the conclusion is these are passive sellers. So passive sellers are taking an opportunity to short the market from the tops. So and Nifty was shorted at this level, and price did not sustain, and the POC started to shift lower, and the price just headed downside. So the broad conclusion is that this order flow thing helped to get a conclusion that the price is taking rejection from the higher levels. And you can see here, so let me just clear this. Yeah, you can when we continue the price action, we find that Nifty just came back with this bull trap setup. It's a standard bull trap setup, and whenever it comes down very aggressively, so that all these people who are in hope that the market would come up are trapped. And once Nifty came back, it also broke the day's low. But since this was a support zone, price will not just go down in a straight fashion like a falling knife. It will spend some time there, it will consolidate, and then the price will break down. So now what gave me the conviction that this moves were not giving any upside potential is because when you use the Fibonacci tool and find out the uh, level where the price took rejection, you can find that the price has taken a proper rejection from just a minute where the yeah, so you can find here that the price exactly took rejection from the 50% level. So ideally what should happen when the price comes back, if it is if the buying is strong enough, of course it consolidated here for a while, if it was strong enough, you can expect that it would cross the 60% level, or even let it cross 50% level also. I mean, this is also a decent enough level, but it took rejection from the 50% level. So now the simple conclusion about what we can draw from this is that the price came down. This is an impulsive down move. This up move is not having so much power. You can see the candles not showing it is, you can see that not even a single candle is of such bullish nature, but the bearish candles, you can see the size of candles getting bigger as it comes down, so clearly shows that the bears are in control. And once it goes up, it took rejection from the 50%. Now since the price is coming down, it's very logical that it will break this swing also, and it will head downside. So that is what I was expecting, and the price broke this support level. And when you continue the price action, you find that yeah, it broke this support zone. Again, there was a lot of support zones in Nifty, because you can see here that even yesterday there was good buying which happened at this level, especially since this was the open is equal to low candle. So these zones will not be broken so easily. It will definitely consolidate for some time there, and then these zones were taken out. So ultimately, Nifty closed somewhere around these support zones itself. But once this breakdown was this happened, definitely one new low and you swing low, the price would clearly make as per price action. So however you may read this, you may also draw a trend line here and trade this breakdown. So it can be done in many ways. It can also see a kind of bull flag, you know, inverted flag and pole also. But whatever it is, the price action was pretty much clear on all the levels that and after this bull trap, it is definitely heading lower. So this was about a Nifty. Coming to Bank Nifty, so Bank Nifty also had this, a very good. You cannot say symmetrical triangle, but the kind of symmetrical a triangle or a pennant you can call. Give a breakdown of this, but the thing is, Bank Nifty was even more weaker than Nifty. At least Nifty post its morning downfall, it to create this bull trap, it went higher. But Bank Nifty actually was better in terms of the price action because it did not create any traps as such. So from the highs, if you check the Fibo levels for the overall retracement, you find that for this first up move itself, just a minute. Yeah, for this up move itself, Bank Nifty clearly took rejection with 0.5. I mean, the first move itself, Bank Nifty did not cross 50% and it just went lower. So again, Bank Nifty was better in terms of price, but Bank Nifty was choppy the last few days. Nifty respected price action much better, but today Bank Nifty respected, and I'm not telling that Nifty did not, but Nifty created a bull trap setup, but Bank Nifty did not, is what I'm trying to tell. So the price headed downward. So generally, since Bank Nifty is more weaker, so it hit this target also in this Fibonacci level. So yeah, I mean, this was the, but Bank Nifty, you can see here that after this level, ultimately it went, and I mean, once something is more bearish, it will generally, as per my observation, first hit the 0.618 on the downward side, and then in best case today, I think 1.618 is also hit, but usually 0.618 one can easily target. So that's why Bank Nifty was a better instrument to trade. So in every fall, you can see that how Bank Nifty gave a breakdown and then consolidated. At every such consolidation, one could break down, one can short, it consolidated. It was proper price action working at Bank Nifty. But one thing which I was expecting is the fall to at least come till here. Why I'm telling this? Because when you look at the chart, you find that yeah. So let me clear this drawing. So when you look at this chart, one thing you find is in between this zone, there was actually not much of a support left. It was it was supposed to come straight to this zone actually after breaking this zone with a bearish candle. But I actually expected that it would come till here. But why only one level which I could find here is that it was this earlier level which acted as a resistance, but still in such a fall, such levels generally don't get respected. I expected the price to come till this zone at least, but that's why that is where the help of option chain we can come to some broad conclusion whether it will fall to this level or not. Because when I was seeing the this is the platform of Dhan where we can easily see the charts and open interest, etc. So yeah, let me show the last one. It was 43,400 put actually. I was seeing this put chart, at that time 43,400 put chart. So what happened is towards the end, this is a 15-minute time frame. I saw a spike in put writing at the end. So it was one thing was very clear that the put writers at 43,400 level, they I think were determined not to allow. I mean, they did not run away, right? So you can see that there's not. This is final unwinding naturally which happens, but there was not much unwinding from the 43,400 put writers towards the end. So if the 43,400 put, you can see here that even till 3 o'clock, 3:10, there was put writing, which was going on actually in the end. Now the point what I'm trying to tell is at 240 when the price was falling, I spotted that 43,400 put writing just spiked. So here I came to conclusion that yes, the fall is not going. I mean the fall would not go down further. So the index would, I mean the bank nifty would not fall further because the 43,400 put writers just spiked actually in the last 12:40 to 3 o'clock. You can see that there was put writing. So that's why the bank nifty did not fall further and just consolidated around that zone. So this can also be one way of using it. And yeah, that is where 43,400 OI change also was positive. We can say they did not want the price to go below that 43,400, and then yeah, I mean 43,500 obviously. Sorry, this is the monthly one. Looking at the weekly, yeah, I was seeing the weekly thing. Sorry, monthly thing. In weekly also is what I was trying to tell, that the OI change was healthy. You can see that there's good OI, addition there, right? So this is what I was trying to tell. Just you can see here that this OI change was healthy in 43,400, and that is why they did not allow the fall to happen. And on the contrary, I mean all the call letters were definitely aggressive. You can see how spread across they were, and that's why the fall happened. But this was 43,400, which was the final support. So overall, this was from the I mean price perspective. Looking at the OI data, let us see the OI. OI also one thing which OI helps us always is it gives some clues actually. So when you look at Nifty's open interest in the morning, see this is what generally we observe, that when something is about to fall, we should only see call writing as a dominating factor. But at the opening, you see that there was put writing also in equal amount. I mean, this is for Nifty. So why is put writing happening in the opening? This basic thing should come or strike to our mind, that if put writing is happening along with call writing, so then definitely if a fall is happening, we must be very cautious on it. So that is why Nifty, when it fell, it gave a sharp, recovery or something to create. It can be anything, but ultimately because of this, put writing, which was there, and a bit of call unwinding, not much, but a bit of call unwinding to create that bull trap setup. Ultimately, it, this. But one thing which you must clearly observe is after the market went up, the put writing receded. Actually, you can see how the put writing actually came down, because ultimately if something is going up and the put writing intensity is reducing, the conviction for that up move will reduce. And you can see here that the call writing starts and put unwinding, and this is the final confirmation of the biggest thing, that the Nifty the call rating and put unwinding, it is coming down. So and post that, there's not much enthusiasm in writing puts at all, and the price just headed downward. So and the thing is, the point is this, what I'm trying to convey, that when there's both call writing and put writing, this should trigger some thought process in our mind as to why both are happening, because data gives a strong clue. And looking at Bank Nifty data, so Bank Nifty's data also was giving a similar clue. In fact, Bank Nifty data was telling that although Bank Nifty was much weaker, but Bank Nifty data was telling that at least there is a one bounce and then a fall. I mean, this is how data should be read, is what I'm trying to tell. Because post that, you can see that the put writing almost kind of reduced or stagnated, and you can see call writing starting up, and you can see put unwinding. So Bank Nifty being the weaker of the lot, it had consolidated for almost 4 or 5 days, and today it gave finally a good move. It was a very rewarding move, we can say, because it had consolidated for 1, 2, 3, 4, almost for 4 days. It consolidated in this tight range and it gave a breakdown, and that's how it generally happens. So coming to the order flow, when price action and OI was sufficient for today's down move, but there are certain areas where order flow could have helped. For example, this first up move, strong limit buying. This portion we can confirm limit sellers, right? So this portion you can confirm limit sellers, and then the delta kept increasing on the downside, confirming the aggressive sellers. And once it reached this zone, some pause, because you can see there is stopping, stopping, there's some stoppage in the fall because of this huge orders coming in, and then price went into a range, and then consolidated and just hardly did not fall much from these levels, as you can see here that and this finally around the VWAP zone, again appearance of uh, the sellers, and you can, so this is also aggressive sellers again entering, right? So again, the overall point is that at such crucial VWAP zones, so order flow will help us to gauge that broad no, I mean to say broad tops and bottoms at least. So this was for a Nifty. Coming to Bank Nifty, so you can see that in Bank Nifty, yeah, I mean these are zones of zero liquidity, almost for aggressive selling, taking place. I mean, generally these zones act as resistance also. I think we are seeing this after a very long time. You can see zero on the ask. So these zones generally act as strong resistance, and you can see the price did not go beyond that. These are also zones of good, so confirming the sellers, and you can see imbalance also on the bid, confirming the aggressive selling. And in fact, Bank Nifty did not cross this level. So, and yeah, Bank Nifty, the fall just continued. You can see that as the fall happened, you can see the increase in delta. Again, one more simple confirmation, and then finally you can see here that yeah, I mean, when I saw this 85K, I was almost pretty sure that the fall is almost coming to an end. That's why Bank Nifty closed around the same zones. So especially this being the round strike of 43,600, etc. So whenever such things happens at round strike, some big orders coming at some round strikes, there are also psychological numbers, and you can come to conclusion that yes, the fall is almost coming to an end. So yeah, this was the order flow and the price context. So, but when you look at the overall view on the charts now, so let me analyze it for on Nifty first. Let us see how Nifty looks on chart on. Let me remove all these zones. So going a bit on a higher time frame, yeah, Nifty. You can see here that Nifty has created a kind of double top. Yeah, just think. Let me just mark the levels. So you can see here that at this high, Nifty has created a double top, a fake. I mean, of course, the bull trap today, a fake breakout, and but still the structure is pretty much bullish. You can see that the chart is still maintaining a good, healthy structure. I mean, when you combine, look at this up move, this is a down move, and this is a up move. It's a double top here. So what the level to watch out now is this. I mean, if Nifty comes down and breaks this swing, so it has a support here. So this is a swing to look out for actually. If Nifty breaks, this swing, easily it can travel to this. So let me just mark this out. So what I'm trying to tell is just mark out these levels on the chart and wait for simple price action to play out. this is a one support zone which is available here for Nifty. And if Nifty breaks this support zone, then we have this swing low as a support, which is roughly around 18600 levels, right? So 18600 as one, and you can also see price has bounced a couple of times. So it has strong support actually at these two levels, 18 you can see 18600-ish levels, you can say, basically, right? So just have these levels on chart. If Nifty breaks this, then definitely it can come towards these levels. Now looking at the Fibo from this swing, so when you look at the Fibo levels for this, you can ignore that top because that was a trap. Yeah, even for this swing, you can see that the price has not retraced much. So when you look at what the price has done, it has just gone up. It has come down to 50% zone, created a double top setup, and still it is here, right? It is still still above 0.38. So 0.382 still here, So the price has to first break this swing first in order to create any you can say change of structure. So that is basically this resistance. So overall, still the structure itself is bullish, but since it has created a double top and given a small, you can say, breakdown from this previous swing, so for in the short term, it is definitely maybe it can come to retest this 0.382 zone, and then if it breaks 0.38 also, it has support immediately. So a lot of supports for Nifty below. So till I think let the data and let the intraday data, let the EOD, everything unfold. So but the still charts overall looks is still in the bullish till it breaks this swing is what I feel. And then looking at Bank Nifty, yeah, let me first remove all this. Okay, so Bank Nifty also, yeah, Bank Nifty actually looks a bit bearish. I mean, not bearish, a bit weak, I can say. When we look at Bank Nifty's, see first, Bank Nifty is very clean on the chart. It got rejected from the tops, proper rejection. But Bank Nifty also broke its previous swing low, right? So this is what I'm trying to tell. Bank Nifty broke this support also, right? So this was the support zone for Bank Nifty. It broke that support. So technically, what Bank Nifty has done, Bank Nifty has created a high. It has created a lower high. So what I'm trying to convey is Bank Nifty has created a lower high. It came down, it went, it has created this on the chart. But what are the levels when you look at this swing? Let me draw the Fibo for the overall swing. Oh, Bank Nifty is just around this 0.78 level. Looks like Bank Nifty will test this swing. I mean, the previous swing. It can, yeah, this, I think it will test this demand zone very nearby. So it should test, this demand zone quickly, and then post. And because this demand zone has multiple, supports, it was 1, 2, 3. Yeah, it has good 3 bounces from this support zone. So Bank Nifty can test the support zone. It's very near. Hardly maybe it can test this tomorrow itself, and then suppose that if this breaks, then we can clearly see that Bank Nifty is coming down to this support zone, which is almost 43,000 levels. Another 500 points dip is on if Bank Nifty breaks this. So, but Bank Nifty has created a lower, low high and lower high structure. Structure definitely a bit changed on the 75 minutes time frame for Bank Nifty. Let us see how Bank Nifty looks on the daily time frame. So when you look at Bank Nifty, Bank Nifty daily chart looks, this candle is pretty much bearish. So, but yeah, that's one. We still have this swing on in Bank Nifty. But the interesting thing is when you look at this swing, on a daily time frame for this, upward swing, you can see that Bank Nifty has still, has just retraced, 0.5%, right? So it's not such a, I mean, for this swing, the earlier upward swing, let me mark this out. So yeah, what I'm trying to tell is for on this daily time frame for this swing, the price has just come to 50% level. I mean, this is very normal in any market for a 50% retracement. So, but this is, I mean, the candle looks very bearish because of the move. But yeah, it is still at 50% level. The point I'm trying to convey is if something breaks the 60.618 level, it still has scope to come to 618 and then take a bounce, or it can also, another scenario is break the 618 level and go down to test the earlier swing. This is a possible ways it can do, but still, yeah, I mean, let us not get ahead of ourselves. So this is what the chart looks like. Overall, that's it for today's expiry analysis. Hope this analysis was helpful. Thank you.